NIO just released their latest quarterly numbers. It's a miss on deliveries and losses are bigger than a year ago, which is why the stock is down over 5% right now, which means that we're back under $5 per share, under $10 billion in market cap. Now, over the last couple of years, we can see that yes, revenue has increased over the last couple of years, although growth has not been so great, let's say. Free cash flow, there was a quarter or two where we could have seen a little bit of free cash flow, but other than that, company is still very much unprofitable. You can see gross profit was getting better and better back in 2021, 2022, but since then it has been trending down, net income trending down in the wrong direction as well. Year to date, the stock is down over 41%. Of course, we know sentiment around EV is not at all-time highs, nowhere near it. There's lots of competition, especially in the Chinese market. So you can understand why there's also some weakness in NIO's business. Now, right now, at the time of making this video, the average analyst price target still sits 40% higher than the price we're at today at $7.40. If we look at NIO's stock's performance in the last 3 years, it's down 87%. Of course, it has a huge increase in stock price during the pandemic, but then the downfall began. If we look at the analyst estimates for the coming fiscal years, you can see that this year revenue is expected to increase around 16% year over year, while EPS still negative for quite a while. Then 45% year-over-year growth in fiscal year 2025, and then another 17.35% growth in fiscal year 2026. And so what exactly has happened? We're going to look at the numbers right now. Of course, do share your thoughts down in the comment section below. Hit all the buttons. If you want to support me even further, do check out the link down in the description and in the pinned comment to get the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So vehicle deliveries for the first quarter came in just over 30,000, which was a miss of their own guidance. That consisted of 17,809 premium smart electric SUVs and 12,244 premium smart electric sedans, representing a decrease of 3.2% from the first quarter of 2023 and a decrease of close to 40% quarter over quarter. Of course, we know Q1 is usually a slow quarter for the company. As you can see here, deliveries in the last couple of quarters, you can clearly see that Q1 is usually a weakish one, Q4, Q3 stronger. And so if we look at a couple of metrics here, vehicle sales decreased 45% quarter over quarter and 9.1% year over year. Vehicle margins did increase year over year by 410 basis points, but decreased 270 basis points quarter over quarter. So total revenue came in 7.2% lower than last year and 42.1% lower than Q4. If we look at gross profit for this quarter, that increased 200.5% year over year, but down 61.9% quarter over quarter. Gross margin came in at 4.9%. That's down 260 basis points quarter over quarter, but up 340 basis points year over year. Same story here with regards to loss from operations. Bigger losses than a year ago, but a bit better quarter over quarter. Same with adjusted loss from operations, non-GAAP. And as for net loss, the losses increased 9.4% year over year, but decreased 3.4% quarter over quarter. As for adjusted net loss, non-GAAP, it's actually worse. So quarter over quarter, an increase of 2.1%. Year over year, an increase of 18.1%. Now we also get some information with regards to the April and May numbers. So in April, they delivered 15,620 vehicles. In May, 20,544. Why is that important? Well, because then you can already calculate what will happen in June based on their own expectations. But before that, a couple of comments here from the CEO and CFO. Despite the intensifying market competition, NIO's premium brand positioning, industry-leading technologies, and innovative chargeable, swappable, upgradable power experience have been recognized for their exceptional competitiveness, leading to solid sequential growth in vehicle deliveries in recent months. In April and in May, NIO delivered the numbers that we've just seen before, so great increase year over year. In April 2024, we launched the 2024 ET7 Executive Edition, featuring 180 upgrades tailored to the needs of business travelers and professionals, further enhancing our competitiveness in the premium sedan market. In addition, with a commitment to create better family life, our new smart electric vehicle brand, Onvo, along with the inaugural product L60, was unveiled in May 2024, With Onvo joining our brand lineup, we are poised to expand into the broader mainstream mass market and embark on the next stage of high quality growth. I've been saying this for a while. I don't get why these Chinese companies have to launch so many new models and so many sub-brands as well before even reaching profitability levels. It just doesn't make much sense. I know it's a strategy from China to just flood the market with plenty of brands, plenty of models to destroy the competition because they subsidize it, but still, to me, it just doesn't make any sense. Anyways, continuing here with regards to the CFO's comment, we are continuously enhancing the operational efficiency of our power and service network and aim to consistently extend our services to a wider user base. As of today, we have forged strategic partnerships with 7 automakers in China to promote the standardization and adoption of battery swapping technologies. The worst thing that they can do, by the way. I know some people think it's cool, or you get new batteries, but what about all the batteries that just stay there and wait for somebody to come in and swap them? It's just wasteful. Anyways, he ends on saying, our focus remains on strengthening execution efficiency, optimizing cost management, and accelerating market share growth. And so if we look at the business outlook, they expect deliveries to be between 54,000 and 56,000. And since we already know the April and the May number, you know that June will come in between around 18 to 20,000. So that will represent an increase of approximately 129.6% to 138.1% year over year. Total revenues to come between $2.29 to $2.37 billion, representing an increase of approximately 89.1 to 95.3% year over year. And so right now, if you look at the stock, the market is already open. Apologies for the delay, but there was the SpaceX launch, so had to take some time to watch that. Anyways, we opened up under $5. We're now at $4.81. It seems that the bottom, the stock rebounded quite strongly at around $3.70. The stock was also a little bit oversold back then. Right now, we do sit under the 50 and the 20-day moving average, and of course, the 200-day one as well, which sits at $6.83. If we completely zoom out, we can see that we're back at levels that we have seen, or we have reached, let's say, a resistance back in January of 2020. So overall, to conclude, I think I repeat myself over and over again whenever we talk about NIO and whenever we look at these numbers. You're getting the same thing over and over again. So the question here is, why choose NIO over Tesla or even over BYD? Because if you want that Chinese exposure, why not go for the best thing there, which is BYD in my opinion? Why stick with NIO just because previously it once was at $60 or at $40? To me, it just doesn't make much sense. Losses are increasing, not really growing that fast anymore. Yes, you have those fluctuations here and there, launching new models, sub-brands. Just doesn't make much sense to me. But of course, you can do whatever you want. It's your choice. If you chose NIO because you like the products, you like the car, the swappable technology thing, that's fine. But overall, I do strongly think that there are better options out there. That's just my opinion. You can have your own. Leave it down in the comment section below. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not, and I'll see you all in the next one. Bye-bye.